Alright, as I said, we look for a pattern on a daily time frame, or on a 4-hour time frame, or on a weekly time frame. This is very, very important. Preferably I use a daily time frame because it's more accurate. So this is what we look for. Let's say prices have been coming all the way from down. They bounce here, and then they come and bounce here. Next they come and bounce here, and they bounce here. So one thing now you have is we have touches. We have this touch down here, we have this touch here, we have this touch here. So they have established a strong support and resistance, and mind you, this is on a bigger time frame. So what are we looking for? We can allow them to now come down, because at least here we know they have a strong support area. So once they come here, this is where we get interested in. We want to see a trend day to the upside. Remember, I shared for the longest term the trend day and the reversal strategy. Everything is in my playbook as well. I gave all the strategies. I spent actually the whole year focusing only on one strategy. So when we come down here, that's when we want to execute. What are we executing? We are taking what? A buy, expecting them to come all the way here. Right? So if you are a person who is not full-time on your charts, who doesn't open your charts every day, you can put your take profit. However, you must make sure you put it way before it comes and hits this line up here, because there's gonna be a lot of sell orders here, pending sell orders here. There's gonna be a lot. Remember, everybody is seeing this, and people are executing pending orders. You know that on your platform you can either execute market order, or you can use a pending order. So people put pending orders here. So there's gonna be a lot of sell orders here, which are actually gonna push prices way back down again. So if they come here and then all of a sudden they give what? A trend day to the downside, that's when again we want to take a sell all the way back to the downside. Why? Because most of the time prices are gonna spend their time ranging, which is actually to consolidate, and roughly 20% of the time that's the only time they're gonna be trending or trending downside. But most of the time they'll just be ranging, and the ranging can come in a variety of forms. It could be a rectangle, could be a triangle, or it could be any form of a of ranging. You know all the chart patterns I also gave you, or you can do a simple Google search for chart patterns. So again, when it comes here, we want to see what it does. Why? Because they can piece through and start going down. But if we get a trend day to the upside, we want to wait and take the trend day strategy all the way back to the top. And as I said, here our objective is to see what happens. If they give us a trend day to the downside, that's when we are going down. Sometimes they are not going to give a trend day to the downside. They'll just be giving green candles on a daily time frame going up. So there's no need for you to close this position here if you are somebody who's always on your charts, because there is executing and there is managing. Most people don't get to the point of managing their executions because they are always looking for opportunities every day. It's not always about looking for opportunities. Sometimes you're not supposed to be looking for opportunities, but you're supposed to be managing. Actually, most of the time you will spend it managing. Yes, I do day trading, but you're not gonna do day trading forever. At some point, when your account grows and grows and grows, you now become comfortable with taking long-term things, you see, because now the risk is only less. You find that in a month you only have roughly 5 executions, and then the rest is just managing it. This is where you make more with less stress, you see. So this way you are able to manage it. So if here they keep giving you green candles, there is no trend day to the downside, there's no need for you to actually liquidate this. You can hold it, because once they break here, chances are now they're gonna go this distance times 2. So you can just come and project it here, put your first TP here, and then project the same distance again and put your TP, because mostly they're gonna do that. Although yes, it's gonna be a long journey to the upside, but that's what they're gonna do most of the time. And the reason here we wait to see if there is a TD to the downside is because they can piece through. Right? Even when they come down here, the reason I said we wait to see if they gave a trend day is because they can still piece through and go to the downside. So we want to be sure that here they're giving us the right behavior. So I use something very simple here. Let me show you what I use quite quick. Alright, this is what I use. This is just an asset tracker for me. And remember, I'm looking at the long-term strategy here. I also use all the strategies that I've been sharing with you. This is just for most of the people who are struggling, and believe me, this will change things for everyone who's struggling. So if you have been struggling with day trading, maybe for you need to focus on long-term. So look at this. Here I'm going to select the date. Maybe when I come to my chart, it is on the 1st. This is the date. So here I'm going to put the asset. Maybe I see a rectangle on Ripple. For instance, let's say Ripple has given me what? A rectangle like this. So I'm going to write it here to say asset, and I'm going to come to patterns. As you can see, we have a variety of patterns. However, most of the time it's going to be be triangles or a rectangle. So because Ripple gave me a rectangle, say for instance prices came from down and they've been doing something like this inside the rectangle, right? So I'm gonna put rectangle here, and then if we are here, I'm gonna start looking at what we get. If we get a trend day to the upside, remember I shared with you the trend continuation strategy. I also shared the trend reversal strategy, and as I said, they're also explained individually on the playbook. If I get a TD here, that's when here I'm gonna put setup. I'm gonna say yes, and here it's gonna ask me what type of setup do you see, and then I'm gonna say trend day, trend reversal, breakout, or ranging. All right, because sometimes yes, they can come and give you a small range inside of a pattern, which we call pattern within pattern. Remember Shabaka. So here if I get a trend day to the upside, I'm gonna put trend day, and already you know what a trend day is, as I've already explained, right? So let's say I got a trend day here. I told you that if these are different days in a week. If we get a day like this, okay, this is just a normal day. So we're gonna say for instance here, I'm just gonna put it here, this is gonna be the high of the day and this is gonna be the low of the day. So we have nothing. Let's say now the following day when we come, we get something like this, prices do this and they come and they eventually close here. Then they broke this day here, and simply because they broke the high of the previous day, now we have a trend day. So we are looking for an opportunity the following day. Why? Because when you look at this again, you'll realize that here we got a high and eventually here we got a low. So the following day, what are we looking for? We are actually looking for prices to do what? To drop, so that we can take a continuation all the way up. So this trend day is actually a signal for us, and then the following day we are looking for a buy low opportunity. So prices have to first retest, give us any form of a chart pattern down here. Say for instance, let me choose something that is more visible. Here we can get a rectangle, and then we want to see a breakout retest, and that's when we want to take it to the upside. Remember, here we are looking at the bigger pattern on a daily time frame. All these things are happening inside the bigger pattern on a daily time frame, because this one is the one I prefer most of the time. So when we have something like this, what are we gonna do the next day? Well, if we get a trend day like here, a day that broke the high of the previous day here, maybe this became a trend day, we're gonna tick here that we got a trend day, right? And then the following day, what are we looking for? We are looking for prices to drop. So we're gonna put it here. You see, did they retest? If yes, we're gonna tick here. And then as I said, we are looking for a pattern. Guys, I've explained the strategy the whole year. Go to my recent videos, you'll see them. I have a lot of videos on this, right? Because honestly, on a short-term basis, I've shared all these strategies and you already have everything you need to know. So now I'm compiling everything into a bigger picture, right? And I believe this is going to help for many. It's going to work for many. So if they give us a pattern at key areas here, then what are we going to do? We're going to tick that we got a pattern here. So this takes us to the next step, because they are going to lock a level. Say they give us a pattern, they break out of it, they pull back here, then that's a lock. Mostly this is going to happen at a level. It's going to be at yesterday's high, closing price, or low, but most of the time it's going to be on yesterday's closing price, or maybe it will just be a resistance or support. All right, so let's say that happened at yesterday's close. That's where they gave us a pattern breakout of it and then they retested it. So this is a lock. They've locked the level. For instance, when we look at this here, I'm gonna outline what's happening right here after the pullback. Let's say now they give us a pattern like this. Yes, it could be a wedge, whatever pattern. Then they break out of it, they retest, and then they give us an engulfing candle here. That means this level is locked. All right, this level is locked. So this is a lock to the level. So that's why here I say level locked. So once the level is locked, we're going to the next step here. It will tell us, do we have an engulfment or 3 candle setup, right? You'll normally see the 3 candle setup on a 15-minute time frame. I've explained this countless times with all of you, but mostly it's going to be an engulfing candle, because I just told you here there's a breakout, there's a lock, then they give us an engulfing candle. This engulfing candle locks the level. So if they gave the engulfing candle, that's where you execute. But if any of these criteria are not fully met, then you don't execute. That's why the moment I put this in here, it locked, right? So what we select here, this kind of setup we get here, is actually going to determine the conditional options. But right now I'm not talking about this tracker. All right, I'm not talking about this tracker, but this is what I use, and then after taking it here, that's where I'm going to journal. But that's not important, because I'm not showing you this tracker. I'm just showing you what I am mostly looking for. All right, so let's go back to the most important thing. So as I said, if they give us a TD here, the following day we want to see it pull back a little bit and we want to take it all the way up. And remember, because this is going to be a big pattern on a daily time frame, this can take a number of days. So once the move starts going up, our interest again is here, most probably from before they reach this line. That's where we want to see what happens. If they give us a trend day to the downside, that's where we're going to take it down. Why? Because most of the time they'll spend their time ranging. However, if they don't do that, they just give us big candles going up and up. We want to hold this move. All right, we want to hold this move because probably it's gonna go this distance inside of here times 2. So you just take this distance. If here it's 600 points or whatever, points or pips, then we want to take 1.2, but halfway we put our TP1 and on 1.2 we put our TP2, because this is going to be 600 multiplied by 2. It's this distance multiplied by 2. So you can enjoy this move. You can simply enjoy this move. You see, let me show you a simple example quite quick. So for an example, let me show you this. This is on a daily time frame, and you can see when prices are playing like this, most people won't see what is happening. And if you are impatient and you are actually unable to do day trading, that's why I'm saying maybe for you long term might help. However, it's still gonna require a level of patience. So when we look at this one, we can see that it gave something like this. I've already shared this one in my recent video, but there's something very important that I want to share with you here. If you look at this, you will realize that just by looking at here, by the time they did this, they came and did this, and they did this, and the moment they did this, now we know that up here we have a strong level, right? And the moment they came down here, we also know now that, oh, we are in a pattern, because you don't have what's happening here. So the moment it comes here or close, what are you waiting for? You are waiting to see if they keep going up, or if they give a trend day to the downside. Here you can't do anything because the pattern is not there already. However, when the pattern has 2 touches on either side, then that line is strong. Why is it strong? Because everybody around the world sees it. You see, everybody is seeing it. People are gonna put pending orders there. People are gonna do a lot of things there. Even hedge funds and banks are actually seeing it. So the moment they come next to or near this line, we want to see what happens. As you can see, they gave us a strong bearish candle. This is a trend day to the downside. You see, it's a trend day to the downside, even if it didn't really break it. But this is now a rarer track. If you remember candlestick pattern, I've shared a lot of things in my recent videos. This is a rarer track. Even on my playbook, I did share this kind of candlestick pattern. This is a rarer track. So this tells you that one moment they're up, the next they are down. Everybody went up is trapped. And look at where we are. We are at a significant area, and we already know that here there are a lot of pending orders for a sell. So prices might not reach this line because everybody sees this and everybody is selling, and these people are going to be pushing price down. So using the trend continuation strategy here, you can take it when it pulls back. You see it made a small wick. That's the opportunity we are looking for, all the way to the downside. And then when it comes to the downside here, you can see this is an inside candle. Here on the inside candle, we have a trend reversal strategy. If you look at my playbook, the very first strategy on playbook 1, because we have 3 different books under the playbook, and I'm adding this one, which is the 4th one. So the first one, I shared the trend reversal strategy. That's what you look for here. Why? Because you're already at a key area. You're already at a strong level where people have buy orders here. This is not very hard. It just requires patience. People have buying orders here. So obviously, when it comes here and they give you an inside day here, then you know this is a giveaway. The following day, they are mostly going to stop hunt. Like for example, if prices are going up and up and up and up, and all of a sudden they give you an inside day here, this day is most likely going to stop hunt this inside day, and prices are going to reverse, because an inside day is a pause. However, if you are moving from here and then you get a day that goes down and they give you an inside candle here, this simply means most of the time prices are going to continue going down. You see, so you must understand also what an inside day means, because with that knowledge here, you got a beautiful execution to the upside. And of course, we already know that they might not reach this point. So when you see a trend day to the downside, that's when you can exit, and you're gonna exit with profits. Or else, I told you that we have a part where we have to execute and we have a part where we have to manage. When things go up like this, you can just be trailing to the low of the previous day, as the move is going all the way up, right? But mostly you can also use a peak formation, right? So again, here you could have exited with profit and we got a trend day. You could have taken it down, but because it's inside or almost near the line, you can leave it. But look at what happens here. They give us another trend day. Just look, a beautiful trend day, and it goes up. But the most important thing I wanted everybody to pay close attention to is this area here. If you bought here, because this is a beautiful one, the beautiful one, okay, when they come here, there is no candle that says close to the downside. This move is strong up. Yes, they gave an inside day, but we can see they never closed. They never closed where? They never closed below, you see. So this move is just something to hold. If you're managing it well, you are in approximately 3,000 points in profit right now as I'm speaking of today. That's why I'm emphasizing on long term. If you really want to see big numbers on your account, have to focus mostly on the long or on the bigger picture, because long term mostly align with fundamentals. You see, long term aligns with fundamentals. Fundamentally, the dollar is weak this month and even last month. Yes, when we look at the job market and in the with the to the inflation data. So this is like in line with the fundamentals. So this is as easy as A, B, C. And you can't say like you're gonna take multiple trades. You can see on this one alone, the first trade was roughly somewhere here, the second was somewhere here, the third was somewhere here, and still you only have 3 executions in 3 months, in approximately 2 to 3 months. You see, the risk is minimum. Even if you put the risk on the low of this day and your risk is a little bit bigger, you are safe because you're not always gonna be executing. So with this, you're gonna spend more time managing than executing. And if you are spending more time managing, that means you are highly profitable, because every time you execute, you expose yourself to risk. But mostly when you manage, you have already covered the risk because you have already trailed. You see, once there is a pullback, you trail to that pullback, you trail, you add. You see, so most of the time is managing. All right, let me show you something else right now. Well, again, if you can see this one, this is Ripple. On Saturday, when I was doing my analysis, I did see that Ripple gave us a trend day. Remember on my criteria, I said what pattern do you see, and I also put like patterns twice, because sometimes they can give you a mini pattern here. But when you look at this one, I knew immediately that this is a trade. Yes, sometimes you can take the trend reversal, but here you can see they never gave something very good the following day, you see, because they started by breaking it and they never really gave anything good if you really looked at that day. But look here, they gave a trend day. You see, they gave a beautiful trend day. All right, on Saturday, this is the one when I was analyzing for this week, I saw it outstanding as compared to others. So this for me is to hold until I see what happens. Already I've trailed to break even. You see, already I'm on break even. I'm just holding to see what happens. Okay, because most likely they're gonna come here. Why? Because most of the time prices are just ranging. It doesn't matter what kind of pattern they use when they are ranging, but most of the time they're ranging. Yes, they can still come down, but even if they come down, I'm gonna exit this with a lot of profits, you see. But if they go all the way up here, it's gonna eventually be even more profit. And if here they don't give me something like this, because every time they come to the line, you can see that's where they bounce to show that this line is strong, and this line has been hit here before coming down, and it has also been hit here, and they hit it here. So this one was already a sign that we were in a strong pattern, you see. So if here they don't give us a trend day to the downside, I'll just be holding it, because more likely it might break, or else it might reverse and come down. That's where I'll be willing to take a sell. You see, easy. Here's another one. If you look at this one, you might not see what's happening until you familiarize yourself with patterns. Remember, I gave you all the chart patterns. Even if you do a simple Google search, you'll find a lot of chart patterns. When you look at this one here, beautiful one. You see, this is a wedge. Beautiful wedge. You see, so it's on a daily time frame again. When I pull this up, you can see that we had a very beautiful touch where first touch was here. You can see they bounced here. The second touch was here, another touch here, and then we had another touch here. So by the time they came here, we knew we were already in a strong trend. But look here, they came, and the following day it's a railroad track. Where? At the rear of a daily time frame pattern. This is where you wait for the trend reversal strategy. All right, because sometimes they'll give you railroad track instead of really breaking yesterday's low and low or high or trending. But when you come to a daily time frame, you will see a railroad track. This is simple as it can get. The following day you want a small retest, and then you take it all the way. The goal is to take it to this line. However, remember I said we are managing. managing. Here they never gave us a trend day to the downside, because yes, some days they'll give you things like dojis or weird candles, but they haven't given anything here. Just like in gold, they haven't given anything to show that they are going down. Then they went all the way to the top. This is holding, and yes, they came and retested. Monday they opened with a gap. More reasons to get in long, you see. So now it's all about managing, because probably it's gonna be this distance times 2. Already they've gone 1.5, and now they're just going to complete the second part of it. This is as easy as it gets, you see. And I shared this a couple of weeks ago, and these things are happening every time, because honestly speaking, most people, yes, love day trading. Day trading is good, but you need some experience, and what I've seen is most people are actually struggling with it, because people are impatient, and whenever you execute every day, you're exposing yourself to risk. All right, but when you're gonna execute once, just look once, there's no need to take another trade. The only time you take another one is when they have retested and they've opened with a gap. So you see, this is only one execution in 2 months, on this one. You see, the risk is so minimum and the reward is so big. So even if you were to say I'm losing 80%, you're still going to be highly profitable, because you are letting your wins run, you see. So when you look at the bigger time frame, it's really going to come in handy. However, I have to warn you that with this strategy now, you're going to end up taking less trades, very less trades, you see, but you're going to be highly profitable, because you're not paying much fees. Every time you execute, you have to pay fees, the difference in spread. Not only that, the risk you're exposing yourself to, you want to make sure that you are right before the move goes, and if you are wrong, they're gonna close you. Mostly you're gonna revenge. But if you are wrong here, what are you gonna revenge? Nothing. You see, if here they come and close you, obviously they might be giving you another pattern, and even if they give you another pattern and give a trade to the upside, that's gonna be just 2 executions in a month. You can take a bigger lot size, you can actually enjoy whatever you do, and this is freedom, because at the end of the day, this is done for freedom, and this bigger picture aligns well with fundamentals. All right, yes, I'm doing a lot of fundamentals. So as I've said, been years telling you that I'm actually doing fundamentals, because if you really want to be in this industry for the long term, it's gonna be good to look at the bigger picture as well, you see. So I've shared short-term strategies, everything is in the playbook. I've shared a long-term strategy, so everybody now is covered. It's all in your hands to be patient or to do day trading. You will have to decide what works for you, guys. I really appreciate you. If you haven't subscribed, hit the subscription button. And yes, of course, I say when we come to the rear edges, we look for a trend continuation or a trend reversal. I have a lot of videos about that, and I also have a full PDF with all the strategies well explained. They are there, you can just get it from my description. It's a lifetime update, so everything is there. If you're looking for the trend reversal, you're looking for the trend continuation, or you're looking for a strategy for indices, they are all there. Everything I actually do is there. So guys, you have everything. I really appreciate you. Have a beautiful night. Thank you.